Welcome back to the Dubai Investor Club podcast, episode 2. I'm Alex, and today's focus is on Dubai versus Australia. And as I'm preparing a report for my Australian customers, let me walk you through some numbers worth considering. Both markets have their strengths. Australia is steady, predictable, and familiar. Dubai is younger, faster moving, and still evolving. That contrast alone makes this an interesting comparison. On appreciation, Dubai has been running ahead. Villas here have shown strong growth this year, in some prime zones, close to 25 to 30%. Even newer areas are still seeing double-digit gains. Australia's national forecast sits around 5 to 6% growth for 2025. Stable and consistent, yes, but not the same acceleration. Rental yields show a similar pattern. In Dubai, depending on the community, you're looking at 5.5 to 9.5% gross rental yields. Family-focused areas like JVC often come in around 7 to 8%. Business Bay or Marina, more central and established, averages 6 to 7%. In Australia, yields are lower. Sydney apartments around 3.5 to 4.5%. Melbourne and Brisbane in a similar range. But let me pause here. Property isn't really about year-to-year snapshots. Off-plan projects in Dubai often take 2 to 3 years to complete. During that period, values can move up, and once the keys are handed over, rental income comes in on top. Looking at projects launched in 2022 or 2023 gives a clearer picture. Many of those are now finished, appreciated, and generating steady yields. That's where I think we should look more at return on equity. Not just what's the yield this year, but how does the equity you've put in evolve over a few years, and how might it position you for the next property? That longer view makes the conversation more relevant. Taxes also shape the picture. In Dubai, there's no annual property tax, no capital gains tax, and no tax on rental income. Just a one-time 4% land department fee at purchase. In Australia, investors face stamp duty, land tax, council rates, and capital gains tax. Neither framework is inherently better or worse, but they do create very different outcomes for investors. Accessibility is another factor. In Dubai, off-plan entry points can be more flexible, 10 to 20% down, with the remaining amount spread over the construction phase. In Australia, financing leans more on traditional mortgages. The average new home loan is around 678,000 Australian dollars today, with interest rates north of 5.5%. Different systems, different entry paths. And there's residency to consider. The 10-year golden visa linked to property above 2 million Emirati dirhams is becoming a significant factor for many investors. Not just about returns, but also about lifestyle and long-term positioning. So what does this all mean if you're listening from Sydney, Melbourne, or Brisbane? Australia offers stability. Dubai offers more growth potential, higher yields in many cases, and some additional lifestyle options through residency. The point isn't to say one market is better than the other, but to understand how each fits into a longer-term strategy. If you'd like to share your perspective or talk about how you're approaching these markets, I'd be glad to hear it. I'm also open to talking about partnership programs with those who see potential in working together. And of course, you can always join our Telegram group to continue the conversation. Thanks for listening to episode 2 of the Dubai Investor Club podcast. I'll see you in the next one.